Real estate prices are coming down and rent prices are coming down. But what in the world is going on with Airbnbs across the country and in Jacksonville, Florida? We have an expert with you here today that's going to be giving you the reality of what's happening, not what's on the media that's just pushing more sales and trying to get you to buy stuff that won't work so they can line their own pockets with these lenders and realtors and Airbnb companies. We got a real deal panelist with us today, and he will be sharing with us what's actually going on. So stay tuned on, it might not be what you think. So watch till the end and you can get all the data that we have to talk about. So here's the reality of what I have seen happen. And this comes, and Andrew, I love your commentary on this, but we have had basically an Airbnb or short-term rental explosion over the last few years. I know Airbnb did their IPO in 2021, it looks like. And since then, we've just seen this incredible growth of number of rentals available. Why did this happen? And why did it happen so fast? What did the need come from?
I think we had a multitude of things that were kind of a landslide that built what it is today. So like you had mentioned, it got extremely popular whenever Airbnb IPO'd. I think we had a ton of, pent up travel demand. We had record low interest rates. So whenever you combine all of those things together, it's probably 4 or 5 factors that are getting us to like where we are today in the real estate market.
Yeah, absolutely. In 2021 was like nearing the peak, right? Because the Fed started raising rates in March 2022. And then, we started seeing weakness in October 2022. Mm-hmm. That was kind of the peak. But you can still see here that people are still buying and putting Airbnbs into the inventory even past the peak period. Here's another piece of data that came out from AirDNA that short-term rental listings are up 75% since 2021, up 750,000 active listings. And that's just a staggering number of active listings. And it does look like there's some seasonality there too. I guess people pull their houses off of the market during the later months of the year for holidays. Tell me about that.
Yeah, I mean, I think there was a little bit of a culture shift, and I was doing some research on this. And one of the things that I continue to come back to is it's kind of like you don't want to miss out on the boat. So whenever rates were a little bit low, Airbnb got a ton of popularity, like we mentioned after the IPO. It was kind of like cool to buy a short-term rental. It was cool to be a nomad and travel around because we were doing a lot of remote work at that time period.
Right.
So again, like whenever you're adding all of those factors together, so we have low interest rates. Short-term rentals at that time, because there was lower supply, there was a better yield on vacation homes than there was long-term or apartment buildings. So that's another factor you kind of add into it. And then this trend of, I think as real estate investors, we're always like, I'm either going to wait to buy a property or I have to buy one right now because it's never going to be like this again. I think it was just kind of like the perfect storm. And then that just added to a lot of inventory, the popularity, a lot of people that were putting their homes up as second homes because they wanted to make a little bit more money because they were traveling remote or whatever. There's a million factors that we can kind of point to that number right there, but that's exactly what we're seeing in the market too. There's just an oversupply. There's a lot of options for people.
Yeah. So are we saturated now and we should see this level off, or do you think that this upward trend is going to continue?
I think that's tough to answer. I think it's going to continue because whenever you look at the popularity of Airbnb, of Vrbo, of Booking.com, and keep in mind, like, those are just booking channels. I mean, people have been using their homes for second homes for, 20, 30, 40 years. It just got, kind of cool for a while. So I think people are going to continue to put their properties up that way. I think Airbnb and other platforms are only going to continue to invest in, their platform, their technology. Because at the end of the day, like, sure, they're a booking platform, but they're also a software company as well. So I think those are some important factors. But then we have some things dragging things back. So like the real estate market, regulation, oversaturation, people who bought poorly in 22, 23, and now they're letting go of properties. It's kind of interesting, what's going to happen over the next 12 or 24 months, because there's a lot of conflicting factors, and a lot of stuff happening like the macroeconomic view of things. So I think the listing count will continue to grow, probably at a much slower pace as regulation starts popping in, as state and county municipalities start stepping in a little bit more to make sure there's not an oversupply and neighbors kind of are not frustrated. But I don't see it getting any less popular by any means.
Absolutely. Got it. So there'll be more supply possibly in the future. And here's the occupancy rate. And, you can see that it peaked up there about 61%. It's come down, 6, 7, 8% since the peak in 2022. Why has that come down? Just because of the number of Airbnbs coming on with less travel demand?
Yeah, I mean, more inventory. I have this conversation with investors, realtors, brokers, every single week that we are not in the heyday of 2021, 2022 anymore. There was a oversupply after the last couple of years. And whenever there is more supply than people are wanting to travel, we kind of run into situations like that. And it's not that it's kind of the same camp as interest rates. So where we were so accustomed to like, wow, we got really low interest rates, but historically that's not the case. So whenever you look at 2019, 2020, it's back to what it was then. We just kind of had a unicorn year through 21 through 23. So now it's kind of back to real life. But that's where people's real estate goals need to readjust a little bit. Like we're not in those years anymore. You can't buy on those years anymore. It's really tough to do historical pacing on that previous data. So now they need to reset. Okay, what is the market now? What is occupancy now? What are home prices now? And then that's how they need to be investing in real estate.
Got it. So those people who bought in 23 and 24, are they like underwater? Are they struggling? What does it look like as an operator? Are they obviously had a higher interest rate than the people in 21, early 22?
Yeah, I will be completely honest. We're seeing a ton of that. We're seeing a lot of people that made poor purchases.
Yeah.
It's not, and I think the industry as a whole gets a bad rap whenever stuff like this happens, but it's more so poor, financial decisions by a lot of
Poor
people.
underwriting, right? They
Yeah,
didn't
poor
underwrite it.
underwriting.
They thought occupancy would be higher. They thought rents would be higher.
Well, they were going off 2021, 2022 and the start of 2023, and they didn't look at that historical data. So I bet you nobody looked at, 2018, 2019, where they saw 55% occupancy. They rode the wave. They thought, this is cool. Airbnb IPO'd. Everybody's buying a vacation rental. Let me jump in right now. And there wasn't a lot of financial education behind anybody buying properties. So we have a lot of people in that camp, man, to be completely honest with you, to where they bought properties at a very high rate because the prices were high. The interest rates were just turning. They were underwriting off of 2022. So now the properties are, I would say that they're doing well, but what's doing well when you have an extremely high mortgage payment? That's the challenge.
Right, exactly. And it's, it is work to operate these things and there are risks for sure.
Mm-hmm.
So, it's no different than what we see in the long-term rental market and what we see with new construction as well for the build to rent. I mean, everybody thought that this type of growth would be permanent and we wouldn't go back to normalized levels. I mean, we're seeing a massive number of multifamily hit the market.
Mm-hmm.
We're seeing single family rentals. Is it just a completely different market or do they overlap at all? Because there's tons of vacancy across the city here in Jacksonville that we can already see, and things are sitting. Like they're not moving, they're not getting showings. If your house isn't perfect in a great location, it's got, it's just going to sit there and just drag. So, they're going to have to reduce the price. Are you seeing kind of the same thing where people kind of overestimated this economy and it was really just a blip because of, artificially low interest rates?
Yeah, I mean they got in over their skis, kind of that saying. I think you're spot on with that. It was a lot of poor decisions over the past 2 years. And that doesn't mean that money can't be made right now or there can't be good purchases whenever it comes to apartment buildings or long-term rentals or vacation rentals, but you got to pencil it out and make sure that the property cash flows on like what the market is now, because we're not in what we were in 21 through 23. That's something I always have to preach to our investors and clients and even realtors. It's just a different market now. So you have to kind of pivot in your strategy a little bit.
Exactly. So here's the Airbnb stock, which basically has gone nowhere since its IPO in 2021.
Mm-hmm.
It's $124. Now, you just talked to me about their fees changing. How does the fees going up, will that impact consumers' ability to rent Airbnbs? Is there a certain point where the Airbnbs get too expensive and people just start finding other ways to, to do it outside of the Airbnb system or go directly to you? Are you seeing a lot of that? Or, are people just saying, forget it all together, I'm just going to go and do a hotel?
I think it's really important to note that Airbnb is a public company and they make decisions with the best interests of their shareholders.
Yeah.
Although we don't always think that all the time. So whether it's, investors or property managers, their guest is their client. Their guest is what makes them money. Like, sure, the inventory is a conduit for people to book, but the guest is priority. And you can see a lot of changes that they've made over the past, 6 to 12 months because of the graph that you see right here, because they've kind of stalled with amount of listings that they can actually put out as far as inventory. So they're diving into, experiences. There's a ton of articles with them investing a ton into AI and their software and platform. They're trying to make it to where they can keep everybody in their ecosystem and kind of be like an Amazon of travel, which I get it. That makes sense for the shareholder, but it doesn't help the investor much. And it doesn't help, property managers much. What we are doing to combat that is, we're building a direct booking strategy. We're building our own brand so we can be our own platform. So that's less fees to the guests, less fees to us if we own the home, less fees to our owners. But at the end of the day, like what I said, they're protecting shareholder value. So they don't want you going off platform and booking direct. They want to keep all the people on the platform and continue to rebook on there and promote hosts that are all about that, rather than larger property management companies that build their own distribution channel.
Yeah, I gotta be honest with you. I just got back from Isle of Palms in Charleston for a family reunion, and man, we get billed for everything. Want to turn the pool on and heat it? $700. $700. It's like, what?
Yeah.
Like, you literally just come over and flip a switch and pay $50 electric. I mean, it's like unbelievable the cost of these, add-on fees. It's very frustrating as a consumer to book through them. I'm sure the property managers are also getting fees, and that's how they kind of get away with it. And there's tons of repairs that need to be done with them. I know this is not an easy business to operate at all. It's expensive. It's very time intensive. You got to have the cleaners go in there and like have people who actually care about the experience that the customer is having. And it's a hard business. So I applaud you, because this is not something that's easy. It's on call 24/7. It's basically running like a little hotel. So when you're talking about building a website, it's the way I see it is like each individual property is its own business, and you have to build a web. Is that what you're doing? You're building a website for each property?
So we have our core direct booking channel, and then we do a ton of marketing avenues outside of that. So like email marketing, targeted like meta ads for the properties. Like, we're trying to do everything because we have to now. I mean, it's so competitive. There's a ton of listings. The best way to like summarize this entire thing is 2 or 3 years ago, when somebody were to travel, they would have 3 options that they really like in Charleston, for example. Now they go to Charleston, they have 15 that they really like. So now they're picking the properties with, maybe it's the best prices, but a lot of times it's, can it fit everybody in my family? Does it have the best design? Does it have the best amenities? So the idea of just like slapping a home up nowadays, it's different. And I think you made a really good point with, they are operating as little businesses. And I think that's something that people need to understand. Like, this is a business, and we are in the hospitality business, but we're also in the logistics business, and we're also in the business of margins as well. That's why they charge you $700 to turn the pool heat on.
It's crazy. Yeah. And I understand it. I mean, it's a high demand, high person, right? Lots of different contractors and moving parts, and it only takes a few bad reviews for your listing to basically drop. So you have to basically, I think the consumers are in control. Do you see consumers? I'm curious. Do you see them negotiate the prices? Can you even do that on Airbnb?
The thing is now, not even that they negotiate prices, people know how to game the system. Now, it was different. It was different a couple years ago. Now people are very clear about how to get a refund. They know how much Airbnb will refund if they complain. Because typically, Airbnb, if there's an issue, they're going to do 30% of the nights affected, oftentimes no question asked if there's an issue, or if there's like an amenity down or something like that. So travelers and consumers, they know this. They know this the same way that they shop for anything else. They know how to get a deal. They know how to haggle. They know how to, get refunds on things. I mean, it's just like any other service-based thing where they're trying to get the price down as much as possible. So like, I have so many stories about, people just trying to get a refund. I know that there's people that will plant hairs and bed bugs and this and that just because they want a free stay. It's insane. So like, we're not only battling the margins, like we're also battling guests at certain points. And don't get me wrong, like 95% of our guests are really great, but we got a lot of people now, they know how to work the game.
And you review back the guest, right? You can give a guest a 1-star review. Is that right?
We can give a guest a 1-star review. So both of us have 14 days to give a review back. They can't see ours until we post it, and we can't see theirs until they post it.
Wow.
But, the challenge we run into, man, is because they know the system so well, because they know Airbnb is very guest friendly, going back to the shareholder value point that I made previously, they know that they can arrive and complain and they're going to get a 30% refund. They also know, they can wait and book last minute and they're going to get a discount. They know all these little tricks and trades where it's a little bit harder to operate than it was, 2 years ago. So it just adds into real estate prices, interest rates, and now, we have the guest working against us. Yeah.
Yeah, now more fees, right? They got to charge more fees. So give me this example. You sent me a deal that you are willing to share.
Yeah.
That, somebody bought wrong and is underwater, and you're seeing more and more of this as the market plays out. Tell me about this one.
So this is, unfortunately, a tale old as time, especially in our market over the past 3 years, or even 4 years. So in this particular situation, and we've probably had 10 or 12 of these, and it doesn't mean that the properties aren't performing, but it's a trap I see a lot of people fall into whenever they're not educated and they're kind of just following the trend. So this person, they bought this property. I want to say it was $650,000. First thing is they used a 10% down loan. So their interest rate's a little bit higher and they're not putting as much money into the deal. So their payment's higher. So I believe the break even on this property is, whenever you factor in utilities, lawn care, pest control, anything else that goes into, operating, they're probably close to $5,000 or a little bit above. Now, back to the point that I made of, is the property doing well? That's such like a double-sided question because it's doing well. The reviews are great. We've had it live for a long time. It consistently beats, long-term rents. But whenever the mortgage payment is, $5,400, is it doing well? Because it's not cash flowing, it's breaking even every single month. But it's because they bought the property whenever the rates turned, they didn't underwrite it, and also bought it with a mortgage product where your payment's going to be a little bit higher. So then your margins get slashed in half.
Have you seen Airbnb rates on products like this go down at all? Because Jack's Beach is a hot spot. Have you seen it drop in any areas of town?
Yeah, for properties that are cookie cutter, we have a lot of new construction, nice new construction, Jacksonville Beach, but you can buy a new construction property at the beaches for $900,000, but we can only charge $400 per night for that property because it doesn't have a pool, it doesn't have a hot tub. And the biggest thing I try to preach to investors is the guest does not care about your mortgage payment. They don't care how much money you sunk into the property. They don't care if you feel your property is the best one on the block. They're looking amenities, price, photos, design. Those are the key things because right now, from what I'm seeing, the consumer's kind of hurting. Like people have a lot of credit card debt. They're not making a ton of money. They're losing their jobs, or maybe their jobs are not doing pay increases. So now whenever they take a vacation, like that couple $1,000, they're going to make sure they get the best bang for their buck. So yeah, I mean, we're seeing a ton of that to where we just can't drive rates up to match where the price the property was bought at.
Hey, man, I'm glad you said that because I feel like I'm the only one that is out here saying the consumer is strapped, and it's obviously impacting the housing market. But I even see today people out there who claim to be experts on real estate locally. They're like, the consumer's great. We're going to see prices go up next year. Another 4%, it always goes up. We're still seeing that conversation, but they don't understand the micro consequences of what's going on, right? We're seeing delinquencies in auto loans. We're seeing like highest ever, greater than the great financial crisis. We're not even in a crisis. We're seeing, mortgage delinquency of FHA at like super high levels. We're just seeing all this distress that's starting to show up slowly and will probably trickle into the next year. I mean, for next year, do you see things getting better or worse if you're an Airbnb investor in a host?
I think, one point I want to hit on really quick is you were absolutely spot on. And I think there's so much data to support that. But what I see on the very ground level, it's more interacting with humans where I'm seeing those things. So I'll give you a couple examples. The amount of times where, let's say, for example, we have a certain cancellation policy in place to where you have to cancel within a certain amount of time to get your refund. The amount of people that beg and plead with us if they're outside of that policy and they're going to lose the revenue to where they're stating like they just can't afford it right now, like they need that money back. Like that's one precursor for this stuff. Like you can see all the articles and graphs and all of that, but this is what people are saying. I mean, we probably have several of those a quarter, if not a month, with people really needing the money. Another thing that we see is we operate a little bit different because we're a larger company to where with like Verbo, we're the merchant of record. We collect all of the payments. The amount of insufficient funds notifications I get and credit card bounces, we have a whole team that has to go and collect payments from those people every single week. So they're booking knowing they don't have money in their accounts. So those are little things that we're seeing. And as far as 2026, I mean, I think travel is going to continue to stay strong. I know Florida is doing relatively well right now. But we'll see what happens with the inventory. Like when there's a lot of properties, we can have a ton of travel. If it's spread across, X amount of homes, then occupancy goes down.
Yeah, it's all about supply and demand.
Yeah.
Both factors. Now, look at this. This is the long-term apartment rentals, and the vacancies are jumping already higher than what we had during the, basically pre-2020 time period.
Mm-hmm.
So, what is going on with short-term is my question from the vacancy levels, because I kind of look at like what you see going on the ground, and it kind of surprises me. When I hear like 60% occupancy levels, I'm like, that doesn't sound very good, right? Because in the apartment world, anything below like 90% isn't great.
Mm-hmm.
So what is a good occupancy level for a short-term rental, or does it just depend on the area?
So there's a lot of factors. It depends on area. It depends on the actual asset that we have, like what's the quality of the property, the amenities. I can speak to what we see in our market, right? So January and February in Northeast Florida, it's going to be a little bit slower because people travel for the holidays, right? The consumer's spending all their money for Christmas and New Year's. They're not going to travel as much in January and February. And also with people strapped for cash, some of the points that you just made, they're not going to be taking that extra vacation in January whenever they can't afford it. So typically we see January and February, it's going to be a little bit slower. I mean, you're probably looking at 50% occupancy, kind of around that range.
Okay.
March, start of spring break, March to, first week of August, that's when you're going to make your money for the most part. So
it's just like the sales market. Just
exactly.
Like really.
Exactly. And it's when people are wanting to spend money. March to August 1st, kind of like that first week of August, we had a very good summer. I think we were probably right around 70% occupancy, maybe a little bit higher. But then we look at August and September right now, like it's extremely slow. We're probably back down to 50, kind of around that range, because it's back to school. People don't vacation. And when people can't afford it, they're not going to take that random vacation in September when it's not summer season and the kids are out of school.
Right. Makes sense. Now,
Yep.
You sent me some data on Airbnbs. Looks like the short-term rental market is still doing really strong in terms of nights. The nights, they're seeing that the revenue is up. There's interest in more larger, higher priced properties. And I think you sent me some really interesting information. I'm happy to go into that. I think the people watching will be interested to see like which actual rentals do well versus the ones that are kind of getting crushed right now.
Yep.
But it looks like Airbnb is saying that Q4 looks pretty good. December is looking pretty good, right? Because you guys probably do your bookings, 3, 4, 60 days out, something like that.
Well, right now, and again, what we're seeing in our market, and then also I know this is a lot of markets across the country, is we talked about the consumer being a little bit smarter, right? So what we're seeing is booking windows are really short. So that's the time between
they want to
now and
negotiate.
somebody books. Yeah,
Right.
so they're negotiating. They know for a fact people are going to drop prices as they get closer to that date, and they're more selective. So if you have what I kind of mentioned when somebody is traveling and you had 2 options several years ago, and now you have 12 or 24, you can pick the one that is going to drop in
Backup
price.
option.
You
Right.
can be more selective, right? So that's kind of what we're seeing. I mean, it's weird. We would launch a property a couple years ago and it would book out for the next 6 months. Now we're probably seeing a 30 to 45 day ramp period, and our booking windows are shorter. So a lot of people are booking within 2 weeks, to where a couple years ago they were booking 6 months in advance. Yep. It's a different market right now.
Yeah, that makes sense. And that'll probably happen with more inventory coming on too.
Oh, yeah.
So this is STR performance metrics for July 2025, right? Increase. available listings increased as well, right? Demand for nights rose just a little bit,
Hmm.
compared to last year. I wouldn't say that like blows me away or anything. Occupancy is down just slightly. So it's kind of interesting. It's kind of showing a little bit of both sides saying this, like we're kind of growing, we're kind of slowing. And so it kind of explains what you're sharing. But like this chart stood out to me the most that you sent over to me. Give me a breakdown. What is this chart telling us?
So this is the Northeast Florida market. This is essentially telling you what not to buy. So this
Okay.
is bedrooms, 2 bedrooms. I mean, heck, even 3 bedrooms. There is an oversupply. So I'll give you a couple examples with our current book of business, right? So I have owners that will reach out to us. Maybe they have a 2 bedroom in San Marco, right downtown. Historically, it's done relatively well. It's probably beaten long-term rental rents by, 40, 50%. Now, because there's an oversaturation of that specific type of property, they're making 15%, 20% more than long-term rents and they're paying for utilities. So is it a profitable property now? No. However, we have properties that are, 6, 7 bedrooms, they sleep 20 people and they're on the river. They're absolutely crushing it right now because, again, I know we keep going back to the consumer, but if somebody's wanting to spend money, they're going to go all out. I think we went through a really big stage of, remote travel nurses. We're seeing all the contracts dry up. So we don't get any travel nurses that reach out to us anymore. And also people are going back to the office, right? So they're just not hopping from property to property, 1 bedroom to 1 bedroom, working remote. It's more so the individual that doesn't want to sign a 12-month lease, staying in those properties. It's longer term stays to where a lot of the money is being made on these big properties, these super properties, things where people are pooling money together and there's 20 people staying at the property. They're paying $2,000 a night.
That makes sense. And the 1 bedrooms, I'm guessing that also has to compete with hotel rooms, right? So, I
Yeah.
mean, it's like, 2 bedrooms is a little bit different than a hotel room. 3 bedroom single family is different. But like a condo or a townhouse, like if I had the choice to do a condo or a townhouse or a hotel, I'm choosing the hotel,
Yeah.
especially if it's in like walking distance of wherever I want to go to. But yeah, I see the ones, and when I was in Charleston last week, every single house was booked, but every single house had like 20 bedrooms.
Yeah.
And it was for family reunions. It was batch. People are still going to spend on those things because they're once in a lifetime thing. But I don't see anybody doing those outside of that. There's definitely, I could see how there'd be weakness in these kind of smaller properties. So
Yeah.
if you were an Airbnb investor today and you found a deal that actually underwrote and made sense, what would be like the ideal number of bedrooms or beds, I guess, whichever one you want to focus on?
Yeah. We're seeing a lot of success in our inventory with properties. Maybe it's not necessarily bedroom count, but if they're sleeping over 15 people, it
15.
puts you in a different category than your 1, 2, and 3 bedrooms where it's extremely saturated. Because then you can pull together your friends. You can pull together, family. You can do the family reunions. And 40% occupancy is okay if you're charging $2,000 a night. So it's a different frame that investors need to get into to where there was a lot of people buying these 1 and 2 bedrooms because it's what they could afford in this area
Right.
when it should have been a long-term rental the entire time. Or they're buying these multifamily properties and they figured out that they couldn't lease it because people don't necessarily have the money. And then rents were going a little bit higher than people's wages were, from what I saw. So then they converted them to short-term rentals and they're like, shoot, we're not making any money off this either. So that's why big properties is, that's what we encourage people to buy. That's the inventory that we want. If you can sleep 10, 12, 14, 15 and have a pool, like you're in a good position. If you have a condo that's a 1 bedroom downtown Jacksonville, you're probably making what long-term rents are. And then you're also paying for utilities and a headache.
Yeah.
You're getting another job.
We had one of our agents look at renting one of hers on the beach in St. Augustine, a beautiful upgraded property. And right down the street, we were looking at the hotel rooms. The hotels would rent for $90 also on the
Yeah.
beach per night. And I was like, hey, like that's what your competition is. And if we underwrote it and, she would be losing like $2,000 to $3,000 a month because there's also the association fees with the condo. And then they
Yeah.
could have restrictions and all these other things. And the other owners don't like that they're being rented
Yeah.
out. And my question for you also is, these 1 to 2 bedrooms, do you see any competition with pad splits, or are those a completely different type of demographic that's looking at pad splits?
I like Padsplits. I think it's completely different market. And
Yeah.
especially in our niche here in Northeast Florida, I'm sure it happens in other markets as well. Short-term rentals and Padsplit are kind of pinned against each other. in a way, whether it's conversations or meetups or masterminds, whatever that is. I think it's a different asset class. It's like pinning multifamily against vacation rentals. I think vacation rentals should be second homes, high end homes, not stuff that really should be long term rentals. And then pad split, that's a whole completely different set of things where there's a ton of bedrooms. It serves a purpose. There's a lot of people that can't afford to sign a 12-month lease because you got to think you're paying first month, last month, security deposit, and you have to furnish the place. It serves a purpose, but they're two completely different assets.
Yeah, I'm guessing it's like the working class versus vacationers.
Yeah, and it should stay that way to where it's separated and not blended together. That's where people get in trouble with like, my property's not making any money. Well, it's because you don't know what you're doing with it and you need to pick one or the other.
I've asked every pad split person I could find to send me their P&L, and they always send me top line. I still have not got one with a full 12-month P&L. Everyone who says, oh yeah, it makes money. I'm like, send me your 12-month P&L. They're like, I don't have it together. And I'm like, okay, that's interesting. You have that immediately together. Yeah. And then number two, they just disappear into the darkness. I mean, I don't know. I see the idea, but we're seeing a lot of distress where people are using sub 2 to acquire pad splits, and it is just like setting up to be a disaster. Where our company is like very hesitant to even let sellers sell to pad split people through sub 2. It's very terrifying. I feel like everybody goes to a Pace Morby event and then comes back and makes all these crazy creative financing offers when they're trying to make something work when the numbers don't make sense. Yeah. And they want to do it with no skin in the game, which is like, the risk is like so high. Like you're at 100% leverage or you're underwater. You're trying to force things to work when the market is saying it shouldn't work. And I think that can actually create a lot of trouble coming in. I like Airbnb because it's simple. Like it's vacation, it's supply and demand. It's like, there's lots of options available for it. So let's keep going with this. I love this chart. So thanks for sharing that. Listing growth drops below 5% in July. So tell me about this chart.
Yeah, so we pulled this directly from AirDNA. It's probably much different than our actual Northeast Florida market, but I think there's a lot of things that contribute to that. And I can speak to our market, right? So we have people that are listing their properties for sale. We have people that maybe they're panicking and they're thinking, do I sell it? Do I go long-term? Do I just move back into the property? And it goes back to, well, I bought it 2 years ago and the prices were high and my rate was 7.5%. Well, that's why you're in a challenge right now. And at that point, any option is kind of handicap. I mean, back to the example that we gave with that property that's actually in our current inventory, can you make that a long-term rental? No, I mean, the rents are maybe $3,000 if you're lucky. It's probably going to sit vacant for 90 days, but your payment's $4,500. So you're taking $1,000 loss every single month to go long-term. Do you sell it? No, they tried that. It was sitting on the market because it was overpriced.
They did. Wow.
Yeah, it was listed a couple of times, but you got to think with a 7% interest rate, it's not going to cash flow for anybody with a new construction because they can't put a pool in. They can't add a ton of cool amenities. So a lot of people are handicapped right now because of their decisions 2 years ago, unfortunately.
Yeah, makes sense. Here's what you're saying, the strong demand for larger listings, and that continues to be the case for the 6+ bedrooms, which is really cool. Makes sense for April. That's when people start traveling. We got the paid occupancy going on here. So tell me about this. What does this mean?
So this is actually and it's over the course of 12 months. So it's an average, but you can kind of see how whenever we're talking about, occupancy, the summer was really good. Obviously we're back into our shoulder season right now. So I think I'm optimistic. I mean, obviously this is our business, so I'm a little bit more biased, but I'm always very blunt and open to give an honest take. I mean, our summer did well. The properties that are underperforming are the ones that are not reinvested back into, or they fall into that camp of the studios, 1 bedrooms or 2 bedrooms. So, back to the kind of the whole theme of this, buy smart, and then you're not really in this situation.
Yeah, you got to know what you're doing.
Yeah.
Now tell me about this booking windows. This is what we're talking, like how far out that they book, or?
Yeah. So it's, for us, this makes it a little bit more challenging to predict revenue.
Right.
And along the same theme of we're in a different market now. So how I mentioned previously, we could launch a pool home in Jacksonville Beach 2 years ago, and we would get bookings for the next 6 months right away. Now there's a ramp up. Now people are just booking shorter, and It's back to the same thing we were talking about with the consumer is a little bit smarter. I know that if I go, let's say we're going back to travel to Charleston, if I look within 3 or 4 days of when I'm staying, there's going to be a ton of discounts. People will slash their price. And I think hosts are people. I mean, they get into the camp of, fear and, let's drop the price. And then it's just a race to the bottom at that part.
It's like an auction for a
Yeah,
room.
dude.
Might get zero if nobody shows up for the auction.
And it's because they don't have the properties that stand out. I mean, they don't have the super properties. They don't have stuff that's $1,000 or $2,000 a night. And whenever there's an oversupply of 2 bedrooms, you're dropping your price to all the other 2 bedrooms, which is probably 30% before the guest is about to arrive. So people are smarter now. They're booking within 2 weeks. I mean, you can even see 30% of our bookings come within 2 weeks. Unfortunately, that's the market we're in.
I love this. And this is length of stay. So what does this mean?
So this is the length that people are staying for their reservations. Whenever you look at primary, this is 2025. Whenever you look at compare, that actually pull a report from 2024. So you're going to see the difference right there. There's a really big spike on one night. To be honest, I don't know what that's attributed to. It's probably hotel stays or boutique hotels. So we'll probably talk a little bit about, what inventory is doing really well. Just how there was a trend for Padsplit and a trend for Airbnb, there's a big trend for boutique hotels right now. So people buying these, 10 to 50 unit boutique hotels, operating them as short-term rentals, and they're much more profitable than a hotel asset. So that's probably what you're seeing right there. But a lot of our guests are staying 2, 3, or 4 nights. And then, a handful of midterm stays mixed into that as well.
Makes sense. And tell me about this chart.
So it's what's doing well. If you're looking to buy something right now, this is probably true in any market. Buy a house versus a condo and apartment. It's oversaturated. So back to the graph that we showed previously, whenever there's a huge supply of something, the daily rates are going to go down and the occupancy is going to go down because it is a race to zero sometimes whenever people just slash their prices and panic.
Yeah, we're seeing the same thing in the general resale market. Yeah. The houses are still doing okay. If it's completely upgraded, it doesn't need a lot of work. If your house is outdated, you're screwed. It's going to sit there because the buyers don't have cash. They just don't have the cash to fix it up. And then the condos and townhouses, I mean, it is like almost crisis level for they're just stacking up and sitting. Very, very few people buying, even in great locations. It's just the association fees.
Yeah, you have a $600 HOA fee. It's tough to cash flow on that.
Yeah, well, people are just like, I don't want to spend that extra on top of the already high mortgages.
It's the same as the travel. When people don't have the money and they're taking one vacation a year, they're going to make sure it is good. And their money is going to go towards something that's going to give them a great experience. It's the same with the home sales. What you just said with people not having the money to update it, they want something turnkey because they're like, I got one shot at this. I got $100,000. I have no more than that. I got to have something that's not going to have, a ton of repairs or whatever. So they want retrofitted properties.
And they negotiate like crazy. And it's great to be a buyer right now because there's so much supply and there's more supply coming on. So this is 10 plus beds driving higher daily rates. This is what you were describing earlier, which is they're benefiting. Now, I want your opinion on kind of the macro view here. So obviously the last 5 years, we've had 68.7% growth here in Florida on the prices, which is just absolutely crazy. This is what we're talking about. Those people that bought beyond the 2022 time period, the cost of buying a house for the mortgage payment is just skyrocketed. I mean, almost doubled, from pre-2020 time period. Like if you look at back at 2015, that, it's doubled within a decade, which is, it's not sustainable. And that's why I see people that are like, well, prices will just keep going. I'm like, what are you talking? Like at a certain point, the consumer is going to tap out and they're going to double up in properties. They're going to live in mom's basement, that type of stuff. They're either going to triple up in a house. Like it just doesn't make sense. The consumer is hurting. This is exactly what we're both talking about. I mean, we see, Andrew, we get a call on short sale every day. Every day. What do I do? I'm going, I can't make the payment. I have to move. I lost my job. The consumer's financial situation is getting worse. The data just came out today about the jobs revision down 911,000 over the last, 12 months, which is great. The data seems like it's fudged, which makes sense because we've been saying probably for 6 months, like it's worse than what the data is saying. And now I think, these type of charts where you're actually surveying and talking to the US, like the consumer directly is is like much more effective. Like you're saying, like I'm talking to the consumer about them getting refunds. They need the money. The owners need the money. We're seeing the same thing. New homes inventory in the South is skyrocketing. It's like already worse than the great financial crisis. And there's more behind it. Look at this under construction. Look at the blue. I mean, there's like you can't drive around Jacksonville without seeing a multifamily project with tons of apartments coming up. Now, I don't know if they're going to put those apartments for rent on Airbnb. If I don't know, these guys are trying to get creative, but I mean, the one down the street, luxury new apartment, is 50% vacant, and they already have like another 400 units coming behind it. And there's a bunch of stuff that's in process, and they're just sitting on it. Pending home sales are already at the great financial crisis lows already, so the pendings aren't doing. We're just kind of scraping along the bottom here. Home sales are super low for existing homes, so we're already in the great financial crisis. If you're a realtor, you're already feeling like you're in the you feel like you were on the high of the world, 3 years ago, and then you're dealing with like the low of the lows. And that's crazy because population growth has increased 20% over the time period since 2008. So, we should have more transactions. So this is just a correction. Single family vacancies are up. So, I talked to the other long-term rental folks. They are just like, this stuff is sitting. It's not renting. We're having to reduce the price. We can't reduce it anymore, else they're underwater. So we go to sell it, but they're not updated. So then they just sit on the market. And so these homeowners are starting to see distress. This is the chart from our MLS, Andrew. And tell us, so while I'm pulling through these, I want you to kind of talk about your business. So you have two businesses, correct? And how many short-term rentals do you manage in Jacksonville, St. Augustine?
Yeah, so we're a little bit over 200 properties. We're probably a couple bucks over 100 million under management.
Okay.
Yeah, so we have the design side. We do some construction on the properties as well, but the core business is the back end property management. And something that I just built. It's a company called Deal Room, to where I think people just need more financial education and they need to underwrite properties a little bit better. So I built this out. I built a custom piece of software where we scrape stuff from the MLS. It runs it through AirDNA API, and it's only on a certain yield. So let's say, for example, we have an investor and they say, hey, I need 15% on whatever property I'm going to buy for taxes at the end of the year. We can scrape everything on the MLS that kind of fits that bill. But the main reason I did this, man, is just education. I saw so many people buy bad properties in 2022, 2023, just to give them a little bit more information so they can make a better decision. It makes my life easier on the management side because they bought a good deal and now I don't have a headache coming into our program.
Right, exactly. Well, that's exactly why I'm doing this YouTube. It's the same thing. I feel like so many people are getting ripped off. I feel specifically bad for the FHA buyers who just get screwed at every peak and they buy at the wrong time and they barely have two nickels to rub together. And I see it happening again right now. I'm trying to get the word out.
Look at how many mortgage applications are just getting denied. I mean, that alone with conversations with people saying that, hey, we need our money back for a refund, or hey, can we get a discount on this stay? We really want to travel, but we don't have the money for it. And then people just, not getting approved for applications. I mean, that really tells you everything you need to know about the consumer kind of hurting right now. It's either like you're doing really well or you're just scraping by.
Exactly. And that's what's causing, Florida housing supply. Like people just don't get paid enough to be able to purchase at these prices and that the payments that they have. So look, I'd love to hear from the audience here. What do you see happening in your local market? Are you seeing distress with short-term rentals? Or people selling their short-term rentals around you? I know even when we were in Charleston, I will say we were surprised by the number of houses that were for sale that were short-term rentals. And we kept thinking like, who in the world can buy a $4 million property a block away from the beach and have this thing cash flow? Because I was looking at what we were paying and I'm like, there's no way they can sell it for that because it won't cash flow. So then they would have to move into a tourist area and live there themselves, being surrounded by people partying 24/7, basically.
We're in an interesting position right now in 2025.
Exactly. So, I'd love to hear from you guys in the audience. Drop the comment below. Andrew, this has been an awesome conversation. We're learning so much from you. Love to have you on early next year to kind of get an update to see how this season goes. But appreciate you. And where can people find you, Andrew?
Yeah, so if you just Google Joseph Ellen Properties or dealroom-net, you can find us online. And I am happy to help, whether it's underwriting a property or just giving you insight on the market. I think people just need more education to buy better deals. So anything I can do to help with that, hit me up.
Awesome. Sounds good. Well, appreciate your time today, brother. And we'll stay in touch. If you're listening to this, drop a comment and a like, subscribe to the Substack where you're going to get information like this from Andrew, from experts on the ground actually doing it, not a big media company that's been paid to put out false advertising to continue to push housing down your throat so they can earn another commission. This is the real deal, people who are operating on the ground. As you know, we're micro, but we have a big view of what's going on and we are very connected to the consumer. So thank you guys for watching. We'll talk to you soon.